In times of geopolitical uncertainty, investors seek refuge. The financial markets become a sea of red, and the fear of losing hard-earned capital grips even the most seasoned investors. It's during these turbulent times that the search for safe haven assets intensifies. They turn to safe haven assets, hoping to preserve capital amidst market turmoil. These assets are seen as a shield against the storm, a way to protect wealth when everything else seems to be falling apart. Traditionally, this meant gold, the US dollar, or Swiss francs. Gold, with its intrinsic value and historical significance, has always been a go-to. The US dollar, backed by the world's largest economy, offers stability. Swiss francs, known for their reliability, provide a safe harbor, yet a new contender has emerged: Bitcoin. This digital currency, born out of the 2008 financial crisis, has captured the imagination of many. Its decentralized nature and promise of limited supply make it an intriguing alternative. This digital currency, operating on a decentralized ledger called the blockchain, promises security and scarcity. The blockchain ensures transparency and immutability, while the capped supply of 21 million bitcoins guarantees rarity. But can it truly compete with the established guard? The question remains whether Bitcoin can offer the same level of trust and stability that gold, the US dollar, and Swiss francs have provided for decades. This essay delves into the battle between Bitcoin and traditional safe haven assets. We'll examine the strengths and weaknesses of each and consider the evolving landscape of global finance. We'll explore Bitcoin's unique attributes, analyze its performance, and scrutinize its volatility. How does it fare in times of crisis? Can it hold its value when traditional markets are in freefall, and compare it to the likes of gold and the US dollar? We'll look at historical data, expert opinions, and real-world scenarios to paint a comprehensive picture. Ultimately, we'll assess whether Bitcoin can truly be considered a safe haven in our tumultuous world. As the financial landscape continues to evolve, the role of Bitcoin as a potential safe haven asset remains a topic of intense debate and interest. Bitcoin, launched in 2009, is often referred to as the pioneer of the cryptocurrency world. Created by an unknown person or group of people using the pseudonym Satoshi Nakamoto, Bitcoin introduced a revolutionary concept of digital currency. It is a digital currency free from government control, offering a new form of financial freedom. Unlike traditional currencies, Bitcoin operates on a decentralized network, meaning it isn't issued or regulated by any central authority. Its transactions are recorded on a public, distributed ledger known as the blockchain. This technology ensures transparency and security, as every transaction is verified by network nodes through cryptography. Two key features distinguish Bitcoin: decentralization and scarcity. Decentralization means that no single entity has control over the network, making it resistant to censorship and manipulation. This decentralized nature is one of Bitcoin's most appealing aspects, as it provides a level of independence and security that traditional financial systems cannot offer. It is designed to be a peer-to-peer system, allowing users to transact directly without intermediaries. Scarcity, capped at 21 million coins, aims to provide a hedge against inflation. This limited supply is a stark contrast to fiat currencies, which can be printed in unlimited quantities by governments, often leading to inflation. These attributes have led some to dub Bitcoin digital gold. Like gold, it is scarce and seen as a store of value independent of governments and central banks. Investors often look to Bitcoin as a way to diversify their portfolios and protect against economic instability. However, unlike gold, Bitcoin's history is short and its price remains volatile. This volatility can be attributed to its relatively small market size and the speculative nature of its investors. While gold has been a trusted store of value for thousands of years, Bitcoin is still in its infancy. Despite this, the potential for high returns has attracted a growing number of investors and enthusiasts. As the world becomes more digital, the role of Bitcoin and other cryptocurrencies in the global financial system continues to evolve, sparking debates and discussions about the future of money. Bitcoin's price is notoriously volatile, swinging wildly in response to news and speculation. This volatility stems from its relative novelty, limited adoption, and susceptibility to market sentiment. Moreover, Bitcoin has shown a strong correlation with risk assets, particularly tech stocks. During periods of global uncertainty, Bitcoin has often fallen in tandem with equities. This correlation suggests that investors still view Bitcoin as a risk asset, rather than a safe haven decoupled from market fluctuations. Gold, on the other hand, boasts a millennia-long history as a safe haven asset. Its physical nature and limited supply have made it a store of value across civilizations. While gold prices can fluctuate, its long-term track record demonstrates resilience and a degree of inverse correlation with risk assets. When markets tumble, investors often flock to gold, pushing up its price. This flight to safety is driven by the perception of gold as a tangible, enduring asset with intrinsic value. Section 5. The dollar's enduring reign. The US dollar remains the world's reserve currency, enjoying unparalleled liquidity and depth in the market. During geopolitical crises, the dollar often strengthens as investors seek safety in US Treasury bonds, considered one of the world's safest assets. This flight to quality bolsters the dollar's safe haven status. However, the dollar's strength can be influenced by US monetary policy and global economic conditions. Section 6. The Swiss franc, yen and treasuries havens of tradition. Other traditional safe havens include the Swiss franc, Japanese yen and US Treasury bonds. The Swiss franc benefits from Switzerland's neutrality, strong economy and stable political system. The Japanese yen, a low-yielding currency, often appreciates during risk aversion due to Japan's large current account surplus. US Treasury bonds backed by the US government are considered among the world's safest investments. These assets have proven their resilience over time, offering investors a degree of protection during periods of geopolitical and economic stress. Section 7. Bitcoin speculation or future safe haven. While Bitcoin's volatility and correlation with risk assets currently preclude it from being a true safe haven, its future potential is undeniable. As adoption grows, regulation matures, and its technology evolves, Bitcoin's volatility may decrease. Its decentralized nature and limited supply could offer a genuine alternative to traditional safe havens, particularly in an increasingly digital and uncertain world. Section 8. The need for time and trust. However, for Bitcoin to truly rival gold or the US dollar as a safe haven, it needs to earn the trust of investors over time. This trust is built on a track record of stability, resilience, and a growing belief in its long-term value proposition. Until Bitcoin demonstrates these qualities consistently, it will likely remain a speculative asset, its price driven more by sentiment and market momentum than by its safe haven potential. Section 9. Conclusion. Navigating the storm. In the current landscape, traditional safe haven assets like gold have long been considered the bedrock of financial security. For centuries, gold has been the go-to asset during times of economic instability and geopolitical turmoil. Its intrinsic value and universal acceptance make it a reliable store of wealth. Alongside gold, the US dollar and the Swiss franc have also stood the test of time. The US dollar, being the world's primary reserve currency, offers unparalleled liquidity and global acceptance. The Swiss franc, on the other hand, is backed by Switzerland's strong economy and political neutrality, making it a preferred choice for investors seeking stability. US Treasury bonds are another cornerstone of financial safety. These government-backed securities are considered one of the safest investments, especially during periods of market volatility. Their low risk and steady returns make them a staple in the portfolios of risk-averse investors. These traditional assets offer a proven track record of stability, liquidity, and a deep well of investor trust. They have weathered countless financial storms and continue to be the pillars of a secure investment strategy. Bitcoin, while promising, is still in its nascent stages. As a digital currency, it offers a new paradigm of decentralized finance. However, its journey has been marked by significant volatility, with prices swinging wildly in response to market sentiment and regulatory news. This volatility, coupled with its correlation with risk assets, makes Bitcoin a risky proposition during times of uncertainty. Investors are often wary of its unpredictable nature, which can lead to substantial gains or losses in a short period. However, as the world becomes increasingly digital and decentralized, the potential for Bitcoin to serve as a safe haven asset grows. The underlying blockchain technology offers transparency and security, which are highly valued in the digital age. Bitcoin's potential as a future safe haven should not be discounted. As more institutional investors enter the space and regulatory frameworks evolve, Bitcoin could solidify its position as a reliable store of value. Only time will tell whether this digital upstart can truly weather the storms alongside or even surpass the established giants of the financial world. The evolution of Bitcoin and other cryptocurrencies will be a fascinating journey to watch. As we navigate the stormy seas of the financial markets, the interplay between traditional and digital assets will shape the future of investment strategies. The resilience of these assets, both old and new, will be tested, and their true value will be revealed in the face of adversity.